Okay, here is an application of the accounting equation. So first of all, here's the problem. The summaries of data from the balance sheet, income statement, and retained earnings statement for two corporations, Bates Corporation and Wilson Enterprises, are presented below for 2014. So you notice I've got two columns. One is for Bates, another one's for the Wilson Enterprises, and then you have all your data, but what I like to do is, first of all, before I do anything, is look at what the instructions say. And the instructions say determine the missing amounts, assume all changes in stockholders' equity are due to changes in retained earnings. Okay, so for the purposes of this presentation, I'm just going to be focusing on just the Bates Corporation because I don't want to keep this thing, within 5 minutes. So I'm just going to be focusing on Bates. So the first thing I'm going to do is write out the accounting equation in a horizontal view. I'm going to write it right over here. So it's going to be assets equals liabilities plus stockholders' equity. The next thing I'm going to do is I'm just going to start plugging in information that's given in the problem. So number one, I'm going to start with the beginning of the year. So I'm going to write beginning right here. And it looks like the beginning asset says it's 110,000. So I'm going to write out 110,000 equals. It looks like the liabilities are 80,000. So I'm going to write that right there. So at that point, I can stop and I can say, well, if I know this equation has to balance, which it is an equation, everything on the left side is 110,000, which means that everything on the right side has to be 110,000. And if I know that the liabilities make up 80,000 of that, I can simply just subtract by taking 110,000 minus 80,000, and thus fill in the ending equity, or the equity for the beginning of the year must be $30,000. So that would be the answer to part A. Now, my next step is I'm going to go with the end of the year. I'm going to do the same thing. I'm going to write end of the year. I'm going to write that right here. And I'm going to start with, looks like the unknown here is assets. So I'm just going to write the equal sign and look at what's given. You've got liabilities, which are 120,000. So I'm going to write that right there. And it looks like equity at the end of the year is 70,000. I'm going to write that right there. And I know that I add these two together, 120,000 plus 70,000 would give us 190,000. And if I know that both sides have to be the same amount, therefore your total assets must be 190,000. So that would be the answer to part B. And that's just simply using the equation and at this point just filling in some unknowns and doing some simple adding or subtracting. Now, the last part is the trickiest part because it really requires you to know the rules. And just to kind of review the rules of retained earnings, you've got dividends, revenues, and expenses, which are the three items that affect retained earnings. And the rules say dividends, I'm going to put a minus because I know dividends reduce retained earnings. Revenues, I'm going to put a plus because I know revenues increase retained earnings. And expenses, I'm going to put a minus because I know that expenses also reduce retained earnings. So the missing element here is dividends. I know these are the three components. This is what happened during the year. So I'm going to go over here and focus on just the equity part. So at the beginning of the year, equity was 30,000. At the end of the year, equity was 70,000. That tells me that equity increased by $40,000. And knowing the rules, I also know that these are the three components which would make up that increase of 40,000. So now I can just focus on this increase of 40 and these three items and see if I can figure out my unknown. So over here, I'm just going to write a simple equation. And of course, the dividends, I'm just going to say I'm going to let that represent X. So I'm going to have my revenues. Just going to write this out, revenues. Put a plus in front of that. Minus expenses. Minus dividends. Equals my change in equity. Now, look at the amounts. I know my change in equity was 40,000, so I'm going to set everything equal to 40,000. So over here, my revenues, which are 225, I'm going to write out 225 minus my expenses, which are 165, minus my dividends, which is my unknown, and I'm just going to call that X. And now I can set that equal to 40,000. So at this point, it's just a simple equation. I'm just going to combine all my like terms. So if I simplify, you've got 225,000 minus 165,000. That would give me 60,000. So I would know that 60,000 minus x equals 40,000. And of course, again, take this over here. Simplify, combine like terms, you'd get negative x equals negative 20,000. And of course, get rid of the negatives. X would be equal to 20,000. So that would be the answer for how much dividends they paid. I'm going to write 20,000. Now, because this is getting kind of messy here, I'm going to hit my erase button and then go ahead and back everything in and prove the fact that 20,000 should be the correct answer. So just remember that this 40,000 is the overall increase in equity. So let's prove this. So if I start over here, if we just said that dividends are equal to 20,000, my expenses are equal to 225, and my revenues are equal to 200. I'm sorry, let me back this out. Screw that up. My dividends are equal to 20,000. My revenues are equal to 225. And my expenses are equal to 165. And of course, the rules are dividends is a minus, revenues is a plus, and expenses is a minus in terms of how they affect equity. I'm just going to plug these all together by taking 225 minus 20,000 minus 165, and just to prove it, that'll give me my 40,000 increase, which was the unknown, and I've just proved that this 20,000 is the missing unknown. I hope this helps.